A very good morning everyone. Welcome to lecture 7 of GST series. In our previous class we have discussed two topics. What are those? Topic number 9, that is nothing but history of GST. Topic number 10, that is nothing but timeline of GST. And we have also thought that we would learn about origin based taxation and destination based taxation. They'll come a little bit later in mostly in other concept itself. They'll be covered, so don't worry. So let's cancel this. It will be covered in other topic in our next class, don't worry. So let's move. We'll just take 2 minutes of I'll just take 2 minutes of your time so that we'll revise whatever we have learned in our previous class. So this is topic number 9, history of GST. GST is nothing but indirect tax. India adopted GST, dual GST model, that is nothing but central and state government both comes together to levy the tax. And Canada also follows dual GST model. So that's the reason it is also called Canadian model of GST. Canada and Brazil both follow dual GST model. They both have federal governments and all. So France is the first country to introduce GST in the year 1954. So in India, GST has come into India on 1st July 2017. So this is the history of GST. And next our topic is timeline of GST in India. So in the year 2000, our former late PM Atalji has mooted the idea of GST in India, and he is also regarded as father of GST. Why? Because he has brought the idea of introducing GST in the beginning. So yeah, in the year 2000, Finance Minister Chidambaram said that from 2010 GST will be introduced in India, but it didn't happen. So after in the year 2014, BJP came into power, and BJP has tried to bring GST to India. So for that, constitution has to be amended. So for that, constitution amendment bill, that is constitution 122nd amendment bill, has been put in the parliament, placed in the parliament. And in the year 2016, constitution 101st amendment bill, that is nothing but this above bill, has got passed. Now that the bill has got passed, it will be called as Act, and the Act number is 101st Amendment Act. So yeah, so after that, with the powers given to the president from that amendment, president has formed GST Council. So GST Council has recommended different bills like CGST bill, IGST bill, UTGST bill, GST compensation cess bill, and those bills got passed in the parliament too in the year 2017. So CGST Act, IGST Act, UTGST Act, GST Compensation Cess Act, and each state has passed individual SGST acts. So finally on 1st July 2017, GST introduced in India. But for Jammu and Kashmir, it's a bit late. It has took 1 week more. So on 8th July 2017, Jammu and Kashmir also started following GST. So yeah, this is what we have discussed in our previous class. So now let's move to our present topic, that is nothing but input tax credit. Let's start. To understand, this is very important concept in GST. Actually, this is the core concept of the GST. This is the reason why India has adopted GST. So please mark it important, and we have separate chapter regarding this topic alone. So for now, what we'll do is we'll try to understand the basic idea. We'll just have some basic idea about this topic. We don't entirely learn about this topic now, but I'll just give some basic idea about it, which is enough for you for first chapter. So we'll learn more about it, deeper about it in next chapter. In future chapters. So yeah. So we'll try to understand it with an example. So let's assume there is a mobile store. Okay, this mobile store is happy mobile store, HAPPI. You can watch that in ads, right? Happy mobile store. Earlier it was lot lot mobile store. So yeah, Allu Arjun would be brand ambassador earlier, now Ram Charan is brand ambassador, I guess. So yeah, so in this mobile store they are selling iPhones. So there is a person who has come to this mobile store and bought one iPhone. How much is the cost? The cost is, the price for that mobile is 1 lakh. So this person is selling something to this person is making profit. Happy, this seller is making profit. We shouldn't call seller, we have to call supplier, but yeah, to make you guys understand, I'm calling it as seller for this one topic, so please do bear with me. So this seller is selling this iPhone to buyer, okay, for 1 lakh, and he is making some profit. Will government require? No. Government will see this and government will try to make some profit out of it. So that's the reason why government charges some tax in it. The tax is nothing but GST. So actually on mobile phones the tax rate is 18%, but for simplicity sake we'll take 10% for now in this example. So let's assume tax rate is 10%. So total comes to 1,10,000. So to buy this mobile phone, this person has to pay 1,10,000 to Happy Mobile Store, and after getting that amount, this Happy Mobile Store has to pay to government the tax amount. Tax amount is nothing but how much? 10,000. So till now we have learned this. That is nothing but GST is an indirect tax. So now government is levying tax on him. So this person is passing the tax burden to ultimate consumer. So finally he pays tax. This person pays tax actually, and he will pay tax to him. He just enroutes that amount through him to government. That's it. Actually Happy is the person who has to pay the tax, but he is not paying it from his pocket, he is taking it from the customer itself. So that's why this is called as indirect tax. So till now this is what we have learned about indirect tax, but actually that's not how it happens. Government won't get this entire 10,000 at this stage. At the final stage government will get 10,000. Obviously government will get and should get 10,000, okay, but government will collect this 10,000 in stages, actually in different stages, at manufacture stage, distribution stage, retailer stage and all, okay. So this total, here it will get some amount, here it will get some amount, here it will get some amount, so total will become 10k. Let's elaborate the example and understand it a bit clear, okay. So for this transaction to happen, initially someone has to manufacture that phone, right? So let's see, there is a person okay, who is manufacturing that phone. Obviously he is manufacturer. He is the person who is manufacturing that phone, and after that this manufacturer will sell that phone to some other person. Who is that person? He is distributor. He can also be called as wholesaler, but distributor is a better word. He is distributor. So yeah, and this distributor will sell that good to retailer. Retailer is nothing but this happy store person. He is called as retailer. And finally retailer will sell that good to customer. So this is how the life cycle of the good will flow actually through the supply chain. So yeah, now what will manufacturer do? So let's assume there is some cost to him. He'll have some raw material, he'll use some labor, he'll use some steel technology and all. For that he'll have some cost. Let's assume his cost is 20,000, 20k. Okay, let's check numbers. 20,000. Okay, on that he'll charge some profit. His profit is, let's assume it is 60,000. So in total his price would be 80,000. He'll sell this good for 80,000 to distributor. So for distributor the cost will be 80,000. But when some person is selling some good to other person and he is making some profit, here, will government keep for it? No, government will charge some GST here. Government will charge GST. So GST is, we have assumed 10% is the GST which we have. In our example we have assumed 10%. So on this 80,000 transaction, the GST which should be paid is 8,000. So in total what should happen is this person will give iPhone to him, manufacturer will give iPhone to distributor, and distributor will pay amount. How much will he pay? He'll pay 80,000 plus 8,000, that is nothing but GST. Okay, so this GST 8,000 manufacturer is collecting. When he is doing some sale, he is collecting the GST. Okay, so that's why we'll call here as tax on sale. For manufacturer it is sale, no, we are seeing it from manufacturer point of view. At this line, at this column, we are seeing it as manufacturer point of view. It is tax on sale. Okay, will he get any ITC? That's a big question. First of all, we guys don't know what is ITC, so let it be empty for now. ITC is nothing but tax on purchases, or in technical terms we can also call it as input tax. And here this is GST of 8,000 here is tax on sale, or we can technically call it as output tax. Okay, output tax matlab we are selling something, the good is going out from the manufacturer, so at the time of that sale the tax is being collected, so that's why it is called as output tax, this 8,000. So what is this ITC and all we learn in a bit. So become, so yeah, we'll also add some other rows here for simplicity in order to understand concept easily. So those columns are paid to government. So this manufacturer is collecting tax, but he has to pay tax to the government, right? Output tax minus input tax. So I'll explain what is this thing, the formula output minus input tax and all. So yeah, for now let's assume this manufacturer also buys something. Manufacturer should also buy something, and on that he would have paid some GST, but for simplicity's sake and in order to understand the concept easily, for now we are assuming that on inputs on his purchases or on his inputs, there is no tax. That's what we are assuming, okay, for now. So that's the reason why ITC here is nil. Don't worry, it will get clearer. 2 minutes. Okay, paid to government. So now what is happening is, this distributor will pay 80,000 and 8,000 tax also to manufacturer. So what this manufacturer will do, this manufacturer will take that 8,000 amount and he'll give it to government, he'll pay it to government. Okay, paid to government amount, how much is the amount paid to government? 8,000 is the amount paid to government by the manufacturer. Did he pay it from his pocket? No, he has collected it from distributor and he has paid it to government. Now it is clear, right? So yeah. So now for distributor the cost is 88,000 or 80,000. Please take your time and tell me, is it 80,000 or 88,000? Without input tax credit it would be 88,000, but in GST there is a concept of input tax credit. That's the reason why it is now just 80,000. How it works, I'll explain. Okay, now what has happened earlier, manufacturer has sold some iPhone to distributor, and distributor has paid some amount, 80,000, that is price, and 8,000, that is tax. So government knows who is paying the tax. Here distributor is the person paying the tax. So what government will do is, distributor, don't worry, you are paying tax to me and this is indirect tax, you can anyway pass it to other person, you can pass it to retailer. So how you will pass? Now you pay 8,000 to me from your pocket. Okay, now you pay 8,000 to me from your pocket, and when you are selling that iPhone to retailer, you can charge tax again. When you are selling that iPhone to retailer, you can charge tax again you will charge GST. So from that GST, you will charge some amount of GST. From that GST you can reduce whatever you have paid. You have paid 8,000, right? Reduce that. Okay, only balance you have to pay to me. So in the total GST you have collected from retailer, when you are selling iPhone to retailer, you would have collected some GST from retailer, obviously. From that GST amount, don't pay entire GST amount to me. From that GST amount, you first take your money, whatever you have paid earlier, you can reduce it, you can take that amount from this, and only balance amount you pay to me, you pay to government. So that's what government says. This is what is called as input tax credit. So whatever the tax this distributor is paying on purchase. Okay, distributor is paying tax on purchase. Now you can get it right a little bit. Tax on purchase. So for manufacturer we have assumed that on his purchase there are no taxes. That's what we have assumed. So for distributor on purchase, distributor obviously on purchase, did he pay any tax on purchase? Distributor, yes, he has paid tax. He has paid 8,000 to manufacturer. So that 8,000 amount will come here, 8,000 as ITC, input tax credit. That is nothing but tax on purchase. That is also called as input tax or input tax credit. So that 8,000 amount comes here. Okay, this is this is the tax which he has paid on his purchase. When he is buying iPhone, he has paid 8,000. Okay, yeah. So that's the reason why that amount is nothing but anyway it is recoverable. Anyway, when he is purchasing, when distributor is purchasing goods from manufacturer, he is paying that tax. When he is selling that good to retailer, he'll recover it anyway. He'll recover back. So yeah. So that's the reason why in CPT you would have general entries regarding this. Sorry, in CA Foundation you would have general entries regarding this. Okay, in chapter general entries, let's assume there is some purchase of some good, some laptop. Let's assume laptop is worth 1 lakh. So for this general entry would be like purchases account debit to cash account. Okay, 1 lakh is the laptop amount, and for this there is also another component called as GST tax. Let's assume it is 18,000, 18%, that comes to 18,000. So purchase account debit to cash. So how much cash should we pay to buy that laptop? We have to pay obviously 1,18,000. We have to pay tax too. But our purchase, what is our cost here? Our purchase cost, is it 1 lakh or 1,18,000? It is just 1 lakh. Our cost is just 1 lakh. Why? Balance 18,000 is nothing but it is as if like we have lent some amount to the government. Okay, that thing we call as input tax. So when we are buying something, we will pay tax, which is for which we will get credit anyway. Matlab, when we are doing further sale, this is on purchase. When we are doing sale, we can reduce this amount. At that time of sale, we can pay less tax actually. Because of this, we have already paid tax here. So at that time, we'll decrease this tax and we'll only pay balance tax. So this amount, now we are giving it to government, but this amount will anyway, we'll recover it from government in future. So that's why we won't add this tax amount to the cost, to our cost. That's the reason why only purchase account will have 1 lakh. Purchase account will have 1 lakh. So this will go to trading or P&L account obviously. So cost will be only 1 lakh. This 18,000 in future it will be recovered from the government. Yeah, I hope it is clear. Please take note of this. It's important actually. Yeah. So that's the reason why here it is 80,000. For distributor the cost is just 80,000, not 88,000. GST is not included. Why? Because GST is recoverable again. Okay, when he is doing distributor is doing further sale, he will recover that 8,000 anyway. So yeah, so for this 8,000 he will add his profit margin. Let's assume it is 10,000. So his price comes to 90,000. So for 90,000 he'll sell iPhone for 90,000 to retailer. iPhone for 90,000 to retailer. Will government keep quiet here? No, government will charge again tax. How much does the government charge? How much is the GST applicable? The GST applicable is 10%. That comes to 9,000. So this X amount there, no, this X amount is nothing but 9,000. No, one second. So yeah, so when distributor is selling good to retailer, now GST he is going to charge is 9,000. So retailer has to pay this 9,000 to distributor. Okay, from this 9,000 he will reduce what are the tax he has paid earlier. Did he pay any tax earlier? Yes, on purchase, tax on purchase he has paid 8,000. Okay, please do remember. So that's why here it is 8,000. So he'll reduce the tax whichever he has already paid. So he'll take that amount and put in his pocket. Only balance 1,000. Balance 1,000 he'll pay it to government. That's what happens. So here how much distributor will pay to government? Will he pay entire 9,000 he has collected? No. From that 9,000, from this 9,000 he'll reduce his 8,000. He'll take back his money which he has paid on purchase, and he'll just pay 1,000 to the government. So how much did government receive till now? on when manufacturer is selling good to distributor, government has received 8,000. When distributor is selling good to retailer, government has received 1,000. So now let's see what will happen now. So what will be the retailer's cost now? Will retailer's cost be 90,000 or 99,000 including the GST? Is it 90,000 or 99,000? It will be just 90,000, not 99,000. Why? Because again what government will tell to retailer is, retailer, listen here, you are paying 9,000 on this sale, you are paying 9,000 tax, don't worry. Now you are paying 9,000. No, what I'll do is I'll give this tax on purchase is 9,000. now 9,000 is what you are paying, right? I'll give this 9,000 as credit. In future when you are selling this iPhone to some other person, when you are selling this iPhone to some customer, don't worry, at that time you will charge some tax, right? From that tax you deduct whatever the tax you have paid right now, that is 9,000. You can deduct this amount and only you pay balance amount you have received from, you would have received some GST amount in the transaction. From that you reduce whatever you have paid earlier, and only balance amount you pay to the government, you pay to me. Okay, that's what government will tell to the retailer. So now retailer will be happy and he'll just take 90,000 as his cost, not 99,000. 9,000 anyways he'll get back, he'll get ITC credit. So yeah, now what will happen, he'll take his cost as 9,000. For that 9,000 he'll add his 90,000. For the 90,000 he'll add his profit. Let's assume that is 10,000. His price would be 1 lakh. So yeah, and what is the GST he would charge? He would charge for 1 lakh, he would pay this for 1 lakh he would sell this good to customer. No, so on that sale also 10% GST will be applied. So 10% is nothing but 10,000. Okay. So yeah, we have forgot one thing. So when yeah, retailer has sold good to customer for how much? For 1 lakh. For 1 lakh he has sold good to customer. So from customer he would have taken some GST at the rate 10%. So 10,000 he has collected from customer. From that 10,000 he would reduce whatever the tax he has already paid, that is 9,000 he has already paid. That 9,000 he has already paid is called as ITC or tax on purchase or input tax. Okay, so only balance after deducting 9,000 from this 10,000, the amount remaining is nothing but 1,000. Now government will receive 1,000 from retailer, only 1,000. So this customer is not buying this iPhone for further sale, he'll use it for his personal purpose. So there won't be any cost to him, like cost, profit, GST tax. There won't be any further GST tax on him. So effectively what is happening here is so finally you can look it here. So actually on this this Happy Mobile Store, this is Happy Mobile Store. This Happy Mobile Store made some sale. On that government should have received 10,000. But this 10,000 government is receiving different stages. So it has received 8,000 here. Okay, it has received 1,000 here, it has received 1000 here. So total this comes to 10,000. So government got it's 10k. So government don't have any problem regarding this at all. Government is getting its tax. And do this manufacturer, retailer, distributor, retailer have any problem? No. Why? Because they are not getting charged of any tax. Initially they may be getting charged, but on further sale they are anyway recovering their taxes back. So there is no problem for them. Ultimately, who is the person who is suffering? Customer is the person who is getting suffered. The ultimate customer or consumer who is buying the good is getting suffered. So yeah, and the other thing here is GST is also called as value added tax. GST. Why? There is a reason for it. See, this manufacturer, when he is doing this manufacture of iPhone, his cost is 20,000. That is his value addition. He is manufacturing something. He's manufacturing iPhone. Here he is adding value, and there is some profit he is adding to it. Profit is also like value. It's nothing but like salary for employee, like wages for labor. It is a payment, profit for ownership. So it is his value addition. He is the person who is bringing all the things together: labor, capital, and all, raw material, labor, capital, and all. So for that reason he will get his payment, that is nothing but profit. So that is also considered as value addition. So his value addition is 20,000, 60,000, 80,000. So on this 80,000, value added tax, GST is nothing but value added tax, that is nothing but 10%. So 10% is charged on value addition here. So government is taking that 10%. Okay. And at this stage, this distributor has bought the good for 80,000, and now distributor has added his profit. His profit is 10,000. Okay. Distributor has added his profit is 10,000. So his value addition is already 80,000 good he has bought. What is the value he added? He added his profit, that is a value here. So on that value, that is on 10,000, 10% GST comes to 1,000. So here 1,000 is collected at this stage. So yeah. So what about retailer? Retailer has bought that iPhone for 90,000 and he has added his profit. It's nothing but again value addition, that is 10,000. On 10,000 of value addition, the GST is 10%, that comes to 1,000 again. So here it is 1,000. So in this way GST is charged at each stage of supply, and it will be charged only on the value addition, not on the entire amount. So yeah, this is the whole concept, and this is the concept of input tax credit, and I hope it is very much clear to you guys. I explained it very slowly and logically. If there is any doubts, if you have any doubts, there are no good doubt, there are no big doubt, small doubt, there are no silly doubt, intelligent doubt. Okay, doubt is a doubt. So if you have any doubts, please do contact me. Please do leave a message in Telegram group. So the link will be provided below in the description. So please don't hesitate to ask doubts. Thank you very much for listening. Thank you. Please do subscribe, share with your friends. Thank you.